Okay, we are live on Facebook, LinkedIn, and YouTube.
Awesome.
Woohoo! Are you excited, Pedro? This is our
Oh man, no, listen. We were discussing before. The more we're doing this, I'm actually enjoying. I look forward to it. You know what I
yeah,
mean? Because the thing is that you and I have been doing this.
yes,
Out of the screen. You know what I mean? We have
yes,
been having
great.
conversation, and we seem to enjoy it, and throwing ideas and having this kind of in which is what led us to this. You know what I mean? That we've been
Absolutely.
discussing and say, hey, why wouldn't we just put it together in something that the public can also benefit from this?
Yeah.
So yes, I know I look forward to it. And now I have it on my calendar. Okay, it's time to to have our conversation. So
That's awesome. Awesome. So I want to say good morning, friends, and thank you so much for joining us this morning, Thursday, 10 a.m. Eastern. Um, for those of you who are returning, welcome, returning guests, returning audiences, I guess. Again, this is not scripted, so I have to go off with what comes to my mind. Just I want to encourage anyone that's watching us today to please go ahead and subscribe on the platform that you are watching us on, so you can always see when we are going live, and you'll be able to see the show and not miss it while we are live. And of course, you can always come back and watch anytime. We are here to provide the most amount of value for and information that instead of you spending hours and hours reading or researching, this would be the best platform for you to come and just check out Coffee Time with Maria and Pedro, and we'll be able to get so much information from a 30-minute segment. With that, I want to take a moment to introduce myself. My name is Marie Torossian, CPA. I'm a chartered global management accountant as well. Previously an auditor and a CFO. Currently, the way I work is I'm a CPA advisor and transformation coach. I've created the Valuation MT framework to help business owners go from 1 million to 10 million and more. And we do this over a period of time, setting up a lot of policies and procedures, getting their financials ready. One of the other things I wanted to mention is, make sure that I've also put it in the chat, is to download my ebook. And it's a great way for you to kind of get an overall idea of how to start a business and all the different steps through the business cycle. One of the other books that I also have, it's on Kindle. It's called The Complete Guide for Business Growth. I've also put the link in the chat, and that way you can kind of check it out over there. So today, again, I have Pedro Gonzalez, my friend, and when it's come to tax, this is the man you want to go to. We work together in collaboration for over a year now, and we love doing these shows. And Pedro, I'll give you the stage. Go ahead and introduce yourself.
good morning. Yes, Pedro Gonzalez, CPA, your business and tax strategist. What we focus is on helping businesses lower their taxes, improve their cash flow, and develop exit strategies. Um, and the goal is to help you maximize your profitability and improve your cash flow, so then you can retain more of those resources, so you can reinvest it in the best way possible. I also finished the ebook on it's a free ebook, the Real Estate Investors Tax Strategy Guide. What I'm gonna do, whomever subscribe to Marie's uh, platform, I'll send a free copy. So anybody that subscribe will add that.
Right. You can also add your link. If you have a link to the book, you can put it in the chat afterwards, Pedro. That way they can just click on it and then be able to go get it.
Wonderful.
Awesome, awesome. So Pedro, last week, the last 2 weeks actually, we've been talking about such cool information. We went through the most important tax deadlines. We talked about a unique prospect that we met in the past 2 weeks ago, actually, and then there were so many intricacies in this person's life. There was a divorce happening. There was three plus years of tax returns not filed, and so we covered a lot of these situations. And then where we left off last week, we were going to talk about a possible IPO. When a business owner is having all these different situations, their bookkeeping is not well done. There's so much of situations
Yeah.
happening at the same time. Plus, they want to possibly get bought out or go on, go on to their first initial public offering. So this is an area that you have a lot more experience because you have actually helped companies go do their first IPO. Would you kind of tell our audience some of the key requirements of what a business will need to do to be able to go into their initial public offering and what the SEC would require from them?
Yeah, the I'm not gonna discuss all the details as far as the application, but what I can tell you
Sure.
is the the I guess the how, and this will be pretty much standard regardless if you're gonna go private, let's say a private equity investor, or you're gonna go public. It's kind of similar. I mean, the investors are looking as a stable, ready company. So, they're going to be looking, one of the areas, and I mentioned before, is going to be the accounting and financial system of your company.
Yes.
And that's something that they're going to be, regardless of the software. I mean, it doesn't matter if it's QuickBooks or
Oh, sure.
whatever. It doesn't matter that you have a sound accounting system that they can be relied on. If you're going to go public, they're going to require audited financial statements. So, again, accounting system has to be in place. Internal controls will be tested, so you got to be ready for that. The other thing that they're going to be looking is into, and this is more the legal aspect, regulatory restrictions that you might have, environmental. Sometimes you don't realize that your business might have to go through some environmental studies. And so again, catches people by surprise that why my business may require that. So some businesses, depending on the industry that you're involved, might require environmental studies, employee agreements. If your industry has unions, they're going to be looking at the union agreements, and so all of those different aspects of your business will be scrutinized, because again, the point is any investor. Their main thing is assessing the risk of your business. So the goal is to what we call the de-risking your business, meaning that we're gonna try is before the you're gonna either go private or you're gonna go to the public offering, is de-risk your business, lower that risk, because the lower the risk, the higher the value. So
That makes sense.
and it will also make the process a lot easier for you to do your sale. I mean, if you have brought that risk to an acceptable level that either the public or a private investor will be willing to buy into your business. So, having, for example, your inventory, have a good inventory
System. Yes.
Again, it gets really overlooked how important it is for the inventory. Those businesses out there that rely on their businesses functioning on inventory. The inventory accounting has to be reliable. They will be testing that. There has to be a correlation between the inventory and the cost of goods sold. Many times, the cost of goods sold going up and down, it makes no sense. Why the costs are going, the cost per unit, the gross profit. I mean, they're going to be looking at analyzing your gross profit margin. And so one of the things they'll do, at least as a minimum, they're going to look at the last 3 years and then see that does it make sense,
Sure.
that relationship. Confidentiality agreements. I mean, if you trademarks, having all of that documented. If you have anything that is should be patented, is it patented? Because again, I'm buying that. So if it's not patented, you have not protected this unique. It could be an app. It could be some sort of formulation that you have, and if you have not protected that, then it's of no value to me. That means that anybody now, including your own employees right now, could take this and now we have a problem. You see what I'm saying? So all of those things have to be analyzed. That's why it's so critical to, again, the accounting. They're going to be looking at your legal aspect. They're going to be assessing risk. So having, and this is no, shouldn't be taken lightly, but, having an attorney that deals with, especially when you're going to go either, again, public or, there's attorneys out there that specialize in this area of the due diligence of preparing you for the exit or selling, or you're going to go public or private, individuals that deal with it. If you have any litigation, uh, you know, that has
True.
to be well documented. Where you stand in the process? Are you, all of that has to be documented. They're going to do anyways a litigation assessment. Due diligence to
Yes.
see
Yes.
if there's any, because again, that there's the ongoing litigation, but the risk that you might be sued. So they're going to be looking at that,
Of course.
including not only from the outside, but in your employees. Do you have the proper measures to reduce at least any, for example, workman's comp claims? So they're going to go through intellectual property, which again goes with protecting your asset. They're going to be looking at intellectual property,
Right.
any that you might have, insurance. Again, another area, you'll be surprised how many businesses out there either are no insurance or underinsured.
Underinsured. Yes.
Yeah. And
Yes.
so when you're getting ready for this type of transaction, then you need to go and look at your insurance. And again, this is the time to start looking at protecting those assets, because that's what you're going to be selling. We talked about this last time. You and I had this conversation about it's a turnkey operations when you want to sell.
Yes. Exactly.
Turnkey operation that you're already looking. This is how you and I help our clients, is going through all these steps. So then the transaction goes a lot faster. It becomes more efficient and increases your value. If there's real estate involved, title, having all the properties properly insured, if there's any mortgages, that the mortgages are all documented and there's good documentation about the mortgages associated with that property.
Yeah.
Any issues with the documentation of sale processes. And again, documentation. People don't think about
Right.
the
They don't think
processes and having manuals. Employee manuals, sales processes, how you're selling to the public.
Yes.
And
Yes.
oh well, I just have a website. Yeah, but you should have, even if it's a simple sales and marketing manual. I'm not saying you have to have this monster documentation. It's something that you can explain, and this is how I train my salespeople. Because again, what they want is also uniform, be uniform.
Of course, everybody's
you-
following a specific structured way
Exactly.
of approach to the client. Then the client experience is also, well received. Everything
Right.
they get the same thing from every person that they speak with. Correct.
Correct, exactly. And so, employee benefits, if you have or don't have, but documenting and have it all very clear about that process. And again, contracts. Having all well documented contracts in general with either, your customers has to
Sure.
be well documented. If you don't have it, this is the time to start documenting all your contracts, any kind of agreements that you might have with your vendors as far as your purchases, because sometimes what happens is you make commitments.
Mm-hmm.
You make a commitment with a vendor that I'm going to be buying this future obligation,
Right.
future obligation. So all of that has to be documented. You cannot just, even though it's Joe, my friend Joe, and I buy this from him on a regular basis, but now Joe, listen, I'm getting ready to do this. I need it now in writing. So all of that, it will help you in the process. Again, it doesn't matter if it's private or public, to help the process. And one last thing I want to mention, when you're dealing with this kind of exit, one of the areas that again, it's kind of shock people, but it's that you kind of start switching from a tax minimization policy
Right. Right.
to a profit
Yeah.
maximization policy.
Yes.
Because now again, you're going through another phase. You want to increase profits. You want to
Yeah.
show that you're more cash flow. You want to show a robust company. And I'm not saying here that there was some nothing wrong in the past. Is that the focus was to
Right.
maximize your deductions.
Sure.
So now you're gonna switch, because now you have to increase the value of your company. So when you're gonna go public, either the public or the private equity investor need to see that this is a robust company, cash flow is healthy, because again, that's what businesses are buying. Investors are buying
Right.
is cash flow.
The future cash flows is basically
Exactly. Yeah, that's in the end what they're buying. You can say I have this idea, whatever. Yes, that's part of it. If it's unique, it's attractive, but the cash flow is something that is quantifiable. I can show you that
Yes.
the money that this business generates, and I can show you a growth pattern over the next couple of years, and that's what they're buying.
Yes, absolutely. And then something that I also caught on when you were saying as well with the vendors, the commitments over a number of years, the same thing is true if you have clients that have made commitments to purchase from you, over the number of years. So if you have, 3-year contracts with clients, those are going to, bring a lot more value to the business than just, just wondering it's a one-year contract, for example. And it depends, of course, what type of industry we're talking about, depending. But those type of commitments would really bring a lot more value to the business when you're trying to get more, investors in there. So this also kind of reminded me of a situation where I was working with a client, and so they were, of course, they were about 5 years. They have inventory. That's how it kind of prompted the story. I was working with them. They had an investor that was interested to possibly join, and invest with them, about, I think, between 250 to 500,000 in investments. And then they were doing their accounting kind of in-house with, kind of my friend, my family member and kind of stuff. So of course the books were not in order, and the investor was not able to make any heads or tails of the data that they were receiving. And so I was actually brought on board. And then one of the key things that the investor told me, can you make the financials GAAP basis? Because this seems to be a kind of cash basis, which is fine. When people start out, it's pretty good, but it gets to a point where when we are thinking future, the cash basis doesn't show us the future. We don't know what is owed. We don't what is owed to us or what is owed to vendors, right? So I had to go in and basically look through, and it was like a mini internal audit type of thing, where we had to kind of look through, the inventory, what they were, if the balances were correct, when was the last time they did the actual count. And then the cost of goods sold, that's something you mentioned very quickly. And that was one of the key things the investor kept on harping on. She would say, these numbers are not making sense. The cost of goods sold is not making sense. Where is the inventory? Because the revenue and the inventory are not, the gross profit is just not making sense to me.
Right.
With all the changes we made and then tried to convert everything. And for example, the other key thing that had happened with the cash versus accrual basis and with revenues, right? So a lot of times cash was received for an event. This was type of an event / inventory. So it's combination. Let's think of a combination industry. An event is going to happen at which time certain inventory is going to be sold for this specific customer. So the cash would come into the door, and they would, my client would record it as, cash received, revenue is going up. And then now we're going to go and order the merchandise we need for that specific day and event. Yeah. So that year-end cutoff was not taken into consideration because the merchandise didn't arrive until the following year, and the event is happening. So when we had to convert everything to accrual basis, this became a massive amount of work to kind of get everything back into a place where it kind of made sense to a certain point, those the year-end cutoffs, which are super, super important. And then for an investor to make heads or tails, at the end of the day, it was still very difficult with that gross profit margin because there was years of, I think, bad data that was playing around in the, in the system. And unfortunately, they couldn't get that investor to invest.
Yeah, it happens quite often, Marie. People don't realize that. There's some statistics out there that from different sources, but basically on average, about 90% of most entrepreneurs, we're talking about the smaller size, is that about 90% of their retirement, the wealth, is tied up to intangible, businesses and real estate. Yeah. And about 75% of those businesses will not be able to be, they don't sell. 75%. I mean, that is significant when you're thinking the amount of small businesses out there that the reason is that they don't realize the value of the business. Yeah. They don't realize that this, quote unquote shop that I have here, that I'm manufacture some little widgets,
Mm-hmm.
I could sell it. I'm not saying, I don't know how much, but you built something that might be of value to somebody else.
Sure.
And so it could be, I don't know, 10,000, 20,000, 100, I don't know, to
Yes.
$1 million. You don't know until you sit down to assess. Before I
Yes.
retire, I might have something here that I built over the years, and I could turn it into a liquid for at least part of my retirement. So that's one, that they have no idea that what they have on their hands right now has value. Number two, they have no idea how much it's worth. They
Right.
don't come down to analyze okay, I have a business, but I don't know how much it's worth.
Exactly. Exactly.
And number three is a lack of planning, is that they're not thinking of that exit. And those are, you and I have talked about this, is that we are all going to exit. Doesn't matter the type of business,
Yes.
your business, my business,
Nobody lives forever.
that we know, the doctor, all of us.
Yes, all of us.
You know what I mean? So it's how we're going to exit. And so the thing is that we all need to start preparing, a plan that how I'm going to exit this business.
Mm-hmm.
And that's, again, the lack of planning. So because of that, and you have entrepreneurs out there that, again, most of their retirement is sitting on illiquid assets. The business of the real estate, that's where they really have a lot of the wealth tied up. They're equity rich. And so how do you protect, how do you increase the value of that, and how you protect it? And then when I'm ready, how do I convert it to liquid with the minimum legal taxes, so then I can retain more of that in my pocket, so I can use it for my retirement.
Absolutely.
And so because of that, then, like I said, about 75% of those businesses will not be sold. And so that's assets that are out there that eventually it dissipates. You know what I mean? It just, you let it go, and you got nothing in exchange for that. And that is a sad story when you see families out there that work so hard in building even their little retail shop in a strip mall, and they could have, packaged that and sell it.
Yes, absolutely. They just, one day, that is it. The store is closed, everybody's home, and that business no longer exists. So when it has actually built in value, and that needs to be actually, if you were to plan it properly and sell it, you can still get something out of it.
Correct.
Of course. Yeah, absolutely. So one of the other kind of kind of bringing a little bit more to the startup phase, instead of right now we were talking about if we're already been in business and we want to go, in a public offering or exiting, kind of bringing to the beginning where we're starting up and we need some financing or maybe some investors to help us, when I say us, I'm putting myself in the shoes of the business owner, or the startup entrepreneur. So when they're going to start out and they want to go get that, they usually need to put together some type of a business plan and some 3 to 5 years projections, right? So one of the things I've noticed in the past, when I've certain entrepreneurs are reaching out, so they're just so afraid of, let's say, sometimes actually committing to the time it takes to build the proper business plan and all the projections, right? So what is your experience from working with entrepreneurs? And then we can, dive in a little bit deeper into what's needed in there.
I will tell you one, don't use the freebies on Google.
Love that.
If you're serious about your business, you want to really get serious investors. I mean, a serious investor will quickly know that you didn't put time into this. I mean, you went to Google, you got a business plan, and you just simply change the name, and here's my business plan. They'll smell it. I mean, these people are savvy investors, so they'll quickly will discard it. So don't waste your time with that. I mean, just put some time. Hire somebody that is experienced. There is a process that if you want your business to be funded, what I mean, and to be funded to the maximum level. Number one. So number two is don't underestimate. Some people are afraid to request the amount of money that really takes.
Right.
And I'm sure you have seen. I have seen it. When the businesses go and they come back with their business plan because they were afraid to ask, oh, but I thought they would reject me. But if you need $1 million for your business to truly take off, don't
Right.
ask for half a million.
Exactly.
Give it half a million. The problem is going to be, and it happens, is that they're short of cash, and now what? It's almost like you see this construction that halfway done. Why? Because they ran out of money.
Yes. Yes.
You know what I mean?
Wait,
Instead
exactly.
of asking the right amount of money that it takes to build that road, they ask for less, or they wasted the money. But going back to the business plan, don't use the freebies. I mean, hire somebody, and depending on the type of business that you have, you need people that understand your industry. One of the areas that also you see a lot that lacks, one, obviously the financials. I mean, sometimes, again, these people are going to tear it apart to see if the numbers make sense. And they'll know this doesn't make sense.
Yep.
They'll throw it back at you. And then, and the thing is that, they're discarding because there's so many offers out there. They'll just go one next.
Right.
It
Right.
does not make sense. Most of the time, they're going to go to the financials because, again, that's the key area that if it makes sense on the financials, then they're going to go to other areas. But if your numbers are not making sense, they'll discard. Now, outside of that, your pricing structure has to be solid. Again, tied to your financial, but many times people have no idea the cost per unit. You know what I mean?
Oh yeah.
So how can you price something if you don't even know how much it costs you 1 unit of your widgets?
Exactly.
You know what I mean? So that's just why you gotta have somebody that understands solid accounting and finance. I mean, to understand, okay, I need to not only put beautiful, templates, is that cost per unit, the selling of the product, and understanding the market. You know what I mean? Who are you gonna sell this to?
Yeah.
So it takes time to build it. You cannot just, again, don't take those freebies because it's it's incomplete. It does not. It has to be modified to you, to your situation, to your market, in the customers that you're telling this investor, I have a unique selling proposition here. What is the USP for you? What is it? Well, then why should I invest in you? Reverse the role. Put yourself in the shoes of an investor. Will you buy that business? Read your own business plan, and will you invest in that business?
Yes, absolutely. Yeah, I've had quite a few experiences where, this lady that I met, and then she said, "Well, I hired someone on Fiverr to do this, business plan for me, but I may still need help. I'm pretty sure I need help. Can you take a look at it?" Of course, I was like, "Okay." Of course, it's a really nice Excel sheet that's been filled out with lots of numbers, and I'm trying to make heads or tails of the numbers. I'm like, okay, what is the assumption behind this number? What is the assumption behind this? How many employees are you hiring? What are their different rates? Because they're not all hired at the same rate. There's an executive, there's this or that. None of that makes sense. So I literally, and I looked at the business plan. I'm like, okay, where is the financial assumptions explained that match to these numbers? It's like as if one person created a business plan, one person put together some numbers. Here's a business plan for you for $20.
$20, exactly. Yeah.
I'm sorry. I'm not saying there's not great people out there on places like Fiverr and that can do.
Sure.
The fact of the matter is that as a business owner, you should also be able to properly look at and value the performance of what's being given to you. If you don't know what you're looking at, they can fool anybody. Another interesting experience I had was, and I actually ended up working on this one. It was a very unique situation where, again, the investor, this was a research and development company in the plants business. So, this was very new for me from an industry wise, but, it was a great experience. But again, internally, they tried to put together some type of numbers, financials, and the first thing the investor said, what are the key levers? What are the assumptions behind this? I don't know. I can see the numbers, but I don't know what they mean.
Right.
So there has to be that combination of like what your business plan is saying, building out what's the opportunity out there? What are you solving? And why should they buy to you? All these key things that, a lot of times they can spend $20,000 on a marketing research, as entrepreneurs, but they are too afraid to spend 20,000 on putting together proper financials that can actually truly get their investment they're looking for. So from that, and what we did was I completely had to bring in the business plan, all the ideas. It's 20, 25 page write up. This is business plan writing. It's very hefty. And then build the financial models with all these questions, number of meetings with the owner to say, what about this? How are you going to hire? Who's your salesperson? What are you going to pay them? This is the market. This is the commissions. These are a lot of key pieces that need to be put in, and not only just put in, but it has to be explained in a way where when the investor is reading that and they can actually see, okay, I get it. I see this line means this, and this is the assumption behind it. So it is quite hefty, and I'm sure we can. We might be able to have another session where we deep into the business plans and projections. It could be a full episode on its own. So I know we are already at the 30-minute mark where, this is where we kind of say, kind of segment away to until next time. So I hope everyone enjoyed our conversation, and then maybe, in the next session or two, the episodes will definitely cover a little bit more detail on the business plan and projections for startups and entrepreneurs. And it could also be, needed as well for those who have already been in business for a while, but they're still looking for that next investor or, getting ready for their exit. So they need to put a lot of numbers together that makes sense. So with that, Pedro, any last thoughts to our audience?
No, just to subscribe, share comments, because again that can also lead into our next conversations. If you have any comments, questions, go ahead and share. And looking forward for our next.
So could you tell our audience your YouTube channel as well, so they can subscribe to your channel?
Yeah, my channel. I have one, but I can't remember the I know it's the last thing you wanna hear, but again, unscripted. That's the truth. I will be better prepared next episode and share the link to the YouTube. It just started. Again, I'm experimenting with that, and with the same concept, and you'll be a part of that one too. On the other side, we'll be discussing other topics, but looking forward to our next week.
Awesome. Sounds good. Well, thank you everyone for joining us. Please, subscribe to our channel, share our videos so that more entrepreneurs and business owners can learn from these great tips that we give every Thursday on Facebook, on LinkedIn, and YouTube live at 10 a.m. EST. All right. Goodbye, everybody.
Take care.
Bye.